doing wonderfully well. Turn my camera on. Lots of action already in the market this morning. Where is my camera? There it is. Let me just post that. All right, so I did put a couple charts, guys, 3 charts, 3 tickers I'm watching in the option trading group as my top day trade ideas. So refer to those. I'll give you one of them here. STX, I'm watching for a fade this morning. It is well off of its pre-market high. I am not even going to consider shorting it until it gets well above 400. Okay. But on watch today for a move to the downside. All right, a couple other things here. SPY ripped all the way in the pre-market up to 698, pulling back right now. So it did establish some pre-market high levels that were pretty intense. Let me just start the other group here. Today is FOMC, so I highly suggest that you keep some dry powder. I don't think this is gonna be a mute. I think this is gonna be a big friggin' FOMC. There's too much structurally that has happened today for this not to be a massive, I think, FOMC event where I don't know what way we're going to get it. So far, the market is still bullish, but I think there's going to be quite a bit of volatility around FOMC. I don't think we're going to have a muted move. I could see an easy plus 1.5 or minus 1.5 day on the indices, but again, I don't have a crystal ball. We will see what happens. All right, lots to discuss here as we get into the swing. Lots of companies reported earnings, guys. Starbucks absolutely ripping to the high side. I am long with common shares. I've actually been sitting on this position for a little bit longer than I would have liked, to be honest. But that's just what happens sometimes with shares. My average is sitting at 91.48. 91.48 long common shares again. That one I'm not even really interested in selling. The only reason I invested a little bit in the company is because I'm hoping it pays for my Starbucks drinks and my girlfriend's Starbucks drinks. Other than that, we'll just sit with those shares. All right, we also have STX, which I had earlier on the screen. Stock is a monster, reporting earnings. Stock is gapping up. One that's even crazier move, ASML, guys, reporting earnings. Boom, 1510 on deck. What a move for ASML to the upside here. Crazy, crazy move, that's for sure. Where is, get my headphones in. Just connecting my headphones here. Just bear with me, guys. Just bear with me for a moment. Ticker F5, FFIV. Why is that not coming up? Big gap up on its earnings report as well. How did Cloudflare do? That came in pretty hard yesterday. Interesting. All right, Nvidia is also flexing its muscles this morning. One of your stronger mag names. It's been in this tight consolidation range for quite a long time now. And one could argue that it's trying to break out of a bit of an inverted head and shoulders here. So obviously the saying on Wall Street used to be so goes Apple, so goes the market. Well, so goes Nvidia, so goes the market is the new saying. And Nvidia breaking out here, which has quite a bit of potential to run. I think what we're likely going to see and what we saw previously in different cycles of the market, if you look at what structurally has happened in the semiconductor land, you've had names like Micron absolutely running, AMD running, ASML absolutely running. Intel recently has been running, minus the big pullback over the last couple days. Big bounce this morning off of news. But you've had a large portion of all of the other SOXX components running to the high side here. And let me be clear, SOXX is crazy strong. I mean, look at that gap up this morning. But SMH, usually leads a little bit more, and it's still leading, but it really hasn't had NVIDIA participate yet. So what I think could happen is I think you can get a little bit of a rotation out of all of the other major semiconductors back into NVIDIA. NVIDIA has just been chopping and digesting quite a bit here. So we'll see if it holds this breakout or if it gets faded, but I could definitely see NVIDIA trying to be a little bit of a black hole where it sucks the liquidity. Just got to get my brokerage open here. All right, we also have Western Digital, ticker WDC. This is another one that's just into the stratosphere day after day after day. Crazy move. 266 on deck. Hasn't even reported earnings yet. Earnings will be tomorrow. Okay. Along with the Fed day, guys, we got a ton of earnings after hours. I mean, it's a wild day today. Portfolios will be made and portfolios will be broken today. That's for sure. I really like FOMC trading day. I think there's a lot of volatility setting up and opportunity. It's the one day where you can, there's a very strong chance we're going to get, that 1,000% trade opportunity. Not saying we're going to execute it, but there's an opportunity on Fed day for it. All right, what else we got? We got TXN, Texas Instruments stock is ripping right now. So nice gap up. TXN, another one that is establishing a bit of a base down here. Look at that weekly chart. Still in a whole lot of chop. Hasn't officially broken out, but really, really firmed up off of the lows. MCH on semiconductors, seeing some strength today. Yep, that's moving. All right, what else? We got some laggers. Ticker APH, gapping down this morning on its earnings. This one's been a standout performer, guys. This one's been absolutely ripping to the upside recently. And I could see this one getting a fat bounce purely because this is the first sell-off from an all-time high on APH. I repeat, first sell-off from an all-time high on APH, and you're already gapping into the 20-day moving average. Earnings are tricky, but I could definitely see this one getting a bounce off of the open. Usually, when a stock sells off from all-time high, it gets a big, big fat bounce. So that's another one on watch for a bit of a bounce trade off its earnings. I didn't think the earnings were that bad, but stock was definitely extended into the stratosphere a bit, but still posting a double beat there. Let's just see the right level. This one's actually on watch for a bit of a day trade long idea. I don't mind it. I do not mind it. Retracing. So the 618 is all the way down there on 141. Let's just see where the low was in the pre-market. Wow. So 140 pre-market low. I'd take it off that level. Let's put a little alert there. All right, so APH on watch for a long around 140 bounce. You also got Skyworks. This is one that's been interesting because it's got absolutely pummeled off of its fake breakout here, and they've just liquidated it with force. Skywork looks like it could be a short continuation down to this 48 zone. I mean, it's looking very weak. SWKS off of a massive gap down this morning. Corvo, QRVO, also under pressure this morning. Stock is gapping down. A little bit of weakness across the landscape there for QRVO. All right, what else we got going on? ELV, Howard Hughes, Mettler Toledo. Okay, we discussed that. Yep. This natural gas charts, they just got wonky all of a sudden. I mean, look at it shows this futures chart down 43%. I was really disappointed when they changed this capital.com chart on natural gas. I mean, it's still probably the cleanest one to trade for natural gas. Um, but they really did some wonky things. UNG right now down about a couple percent here in the pre-market. EQT falling as well. AR, pretty disappointing price action on some of these resource stocks. That's for sure. UPS, guys, is continuing its ascent. I mean, up a little bit. Off of its highs from its earnings, but still acting very, very well. Let's look at Bitcoin. BTC right now is trying to get above its 50-day moving average. Currently is above the 50-day. Next resistance on the daily is 91.3. A little bit of digestion needed to get through the zone, so maybe it builds a flag pattern intraday. But BTC is looking pretty solid right now. If it can get above this 91 pivot here, you should see a squeeze to at least 93K. MSTR crypto stocks are looking somewhat decent in the pre-market. Alibaba continuing to try to press higher. I'm all out of my Alibaba longs. We traded the 165 and 175s, and the option group both went in the money nicely. So, but I'm all out of that trade. Let's look at SMCI here. I was hoping for a little bit more of a dip on SMCI. We caught that beautiful move off of the lows, but stock is acting well. Look at uranium. Uranium still is pushing here. Hard reversal, and it's basically back above that. Silver continues to flex its muscles, almost sweeping the highs last night. Back into a 3 standard deviation move. That is extremely rare. That's pretty much what it got rejected off of last night on the daily chart. Was the high of this was your 3 standard deviation move. Gold, absolutely incredible as well. Gold flying to the high side. Gold right now is over a 3 standard deviation move. Absolutely ripping. I mean, look at that. 1, 2, 3, 4, 5, 6, 7. Systemic breakdown in the market. Looking filthy. Hmm. Pretty incredible price action in gold, that's for sure. All right, so big earnings after the bell, guys. Big earnings after the bell. Tesla will be on watch. Tesla right now has been very choppy. Let me get rid of all these trend lines here. I don't need. So we got Tesla, Microsoft, Meta. A few trillion reporting after hours. So Tesla right now, I really don't know what the hell they're going to do with Tesla. The daily chart is trying to give up some of this bullish price action. Weekly chart still is okay-ish, but I don't really know what they're going to do with Tesla. Microsoft, I feel like they're going to bounce Microsoft. They sold it off pretty hard into earnings. Nice V-shaped recovery. Wouldn't be surprised if they give it an extra facelift off of earnings. Meta, another one that has been absolutely been chopping around on the precipice of breaking out here on the daily chart. Meta. Very sloppy W formation that it's trying to break out of here. Again, I think this one's going to move. I mean, the earnings are probably going to be okay. I don't suspect that they're going to be impressively high, but I feel like they're going to double beat. It's really going to come down to what Zuckerberg says about CapEx. If he says that they've basically lowered their CapEx spending, cut CapEx spending, which I think could be a very high probability that he comes out and says that and surprises the market with a lower CapEx, then the stock is probably going to moon. All right. You also got IBM, Lam Research, Now, Waste Management, After Hours. Some big movers, big movers. This morning you also had AT&T reporting earnings. Stock has been pulverized recently. You got GEV, Verona. Last time I checked, it was down slightly. Now it's basically flat in the pre-market. Corning, GLW, guys. That stock had a monster move yesterday. I'm giving back a little bit of profit today, but still holding steady. PGR, Progressive, insurance play. Stock is gapping up. Decent earnings when I looked at that. It was pretty decent. ELV stock is getting pummeled after it's getting some follow through to the downside from yesterday's news announcement from Trump regarding the healthcare sector, but that's nasty. Nasty. Oh no, ASML is coming in. Don't come in. Right? Smells a beast. Beast. They love doing these blow off moves in semis. That's for sure. Contracts are going to be fairly juiced across the board today, guys. Extra IV priced in on Fed Day. Just keep that in mind. You see this STX. Excuse me. STXs. So right now, tech is still your strongest indice, guys. Apple struggling in the pre-market. Nvidia your strongest right now. All right, let's see if this blow-off move in STX occurs. Blow-off move. Yeah, it pulled off, ASMLs into a three standard deviation move. Crazy. Absolutely insane. It's pulled back in quite sharply from its pre-market high levels. If you look at where it was trading in the pre-market, it was up there. Pretty high. 1569. I was hoping it would stay a little bit more. That was my top short idea, but stock is coming in a little bit for sure. All of these stocks are actually coming in quite sharply. All right, 2 minutes till the open here, ladies and gents. 2 minutes. Let's get ready to rumble. Let me get some more coffee real quick. What? Make some money today, guys. Let's make some money. Short GEV, your first move? Yeah, I'm looking at fading something today as well. Looking at fading something. These markets are open here. Open sesame. Push. Heavy, heavy, heavy. STX is moving. MU coming in hot. APH is into a long level, guys. Pre-market low retest there. Absolutely a beast. Full on beast. Wow, look at Micron squeeze as well. What a monster. STX, guys, ripping. Holy moly, look at STX go. Short, I'm short STX, 422. What a move. It's STX, crazy. Starbucks still acting very well. Snapchat moving nicely. Micron still super extended. Testing 423. UNH is up 1.78%, getting a small bounce. SLV still strong. Bitcoin pulling back slightly. AVG on a tear. Yeah, this whole complex, memory and semis are ripping, flying to the high side. Yes, they are. ASML got reversed pretty hard. Wow. It's now negative. Almost negative, I should say. The pushless STX. What a beast. Holy moly. It's getting somewhat faded here. Micron still mooning. SPY starting to come in a little bit. STX is still squeezing here intensely. Still a beast as well, guys. Micron. Still ripping. See Western Digital, another high flyer. Wow. Western Digital and STX are just mooning here. WDC is ripping. Look at that squeeze on STX. Super impressive. SPY still has a little bit of top wick distribution going on. Micron still absolutely mooning as well. Impressive. SPY doing a good old-fashioned float and grind again. Still holding technical resiliency for the time being. Holding pretty steady. Western Digital ripping as well, guys. That's up 10% on WDC. Holy moly. Some of these stocks are insane. Absolutely insane. Still ripping, guys, trying to break out, testing the highs up 1.82%. Tesla acting well. Meta got faded. Financials, JP Morgan got faded. Microsoft back to the dark side, negative on the session. Gold, silver still holding gains. Bitcoin seeing a little bit of sell side pressure. You still have some impressive price action in Western Digital, Micron, Nvidia, STX, S&P still holding, but just slightly off of that opening range high. Bitcoin and the US dollar are falling simultaneously. Apple still struggling on the session. Micron still a beast, retesting pre-market high on Micron, guys. S&P still squeezing to the high side here, guys. SPY is a beast right now. Big rejection off that opening range high for SPY. Big rejection, I repeat. Nasty rejection, guys. Hitting the tape here. Micron's starting to get a little bit heavier here. Ticker MU coming in. Bitcoin getting slammed right now, guys. S&P still nasty rejection off that high. Silver's still acting extremely well, holding their gains ridiculously well. Nvidia's starting to soften up a bit with the S&P 500 here. QQQ still a beast at the highs. IWM starting to get faded quite a bit here. Again, ASML getting faded. Western Digital still holding, but coming in a little bit here. SPY still holding quite intensely. You got Micron selling off a little bit. A little bit of profit taking hitting STX here. IWM guys is coming in pretty hard right now. The Russell still into a 3 standard deviation band here on STX. Absolute beast. That's for sure. You shorted CoreWeave? Good luck. I hope that pays for you. S&P still holding its strength. Crazy. S&P 500 is still a beast, guys. Acting very, very well. Western Digital still remains, still seeing a little bit of sell side pressure on WDC. Come on, STX. I would love to see STX gap and crack. If STX sells off here, this whole move, that would be impressive. 15% reversal. It's a long shot, but I think I've been patient with it. I haven't touched this one. See it. Silver gold still moving. IWM, guys, is almost negative on the session. Apple getting slapped around. Natural gas down. Yields are green. Dollars moving. Micron still holding its value here. Nvidia is still holding. Starbucks getting faded a little bit, but still up nicely. What else we got? WDC coming in a little bit more now. STX still holding its value. SPY still holding steady. It's crazy. WDC a little bit heavier here. Come on, STX. Give up some of the gains. UNH, guys, bouncing quite nicely today. That's up 3%. UNH. IWM just went negative, guys. The Russell just went negative. Dow also went negative. Western Digital starting to roll heavy here. Market might be in for a little bit of sell side pressure in your S&P. Still holding though. Nvidia still holding. Yeah, QQQ almost all-time high. In the pre-market, we were super high, guys. Just recognize that. Guys, Western Digital almost doing the full gap and crack here. Look at that. So maybe STX is going to follow suit. Western Digital leading the charge to the downside. STX is just holding somewhat steady here. ASML did its full-on gap and crack. Come on, sell it. Sell it. ASML, hard reversal, now down 1%. Nasty. Micron still holding steady. SPY starting to lose some momentum here, guys. It's SPY rolling heavy here, guys. SPY starting to roll. IWM rolling. STX. Micron still holding some of its gains, pulling back from the highs just a touch, but still doing quite well. ASML still pretty weak on the session. AMD starting to come in a little bit, guys. SPY still trying to hold its gains here. SPY starting to lose its opening range low here. Looking somewhat heavy. Nvidia coming in. Russell's still getting hit pretty hard here. IWM looks like a full-on disaster today, guys. The Russell, wow, what a nasty sell candle on IWM, gapping and cracking so far. Micron starting to curl over, Nvidia losing a little bit of momentum here. SPY breaking structure here. Opening range low, coming into pre-market low here for SPY. Looking heavy. Tom got absolutely slaughtered. ASML negative. Dell's trying to hold structure. SPY starting to roll over a little bit here. SPY looking heavy. You got silver getting slightly rejected. Your DXY, guys, is spiking here. Dixie just spiked. Whoa. Nasty spike on the Dixie there. It's causing silver to come in as well as the market. So your dollar is starting to rip here, guys, to the highs. Gold, silver coming in pretty sharply right now. IWM got slapped and rejected pretty hard. Dollar is ripping, guys. I don't know if something hit the news tape, guys, but your dollar is flying. Wow, look at that move on the US Dixie. What the heck is happening to the Dixie? I'm not really seeing anything across the tape, but your dollar now ripping, guys. Holy moly. Look at that dollar rip. That is a full-fledged beast. That's a full-fledged beast. IWM still really heavy here. Silver is only up 0.5%, getting rejected pretty hard on the 30-minute chart. Micron's starting to come in a little bit. Gold got rejected pretty sharply there. SPY losing pre-market low, never a good sign. Russell is still super heavy here, guys, coming in hot. Looks like the Russell wants to head to 261.97. I have a decent long level there. Silver still coming in. So the dollar spiked on Besant's comments saying that they're not intervening in the dollar yen. Yeah, QQ just short crowd core with STX. STX is still a beast right now. Still a beast. SPY coming in. IWM still down 0.46. Dow's negative. Microsoft negative. Apple negative. All right, Nvidia's starting to roll here, guys. Nvidia's coming in hot. SPY is ridiculously heavy right now. Nvidia is still rolling. IWM still rolling. Dollar still pumping, guys. Stock is still holding strength. SPY is still rolling heavy. STX won't even budge. Wow. Crazy strength on STX. That's insane. IWM still ripping to the downside right now. It's on your SPY. Bouncing off that previous high pivot support zone. Micron Western Digital getting a big pump here. Bounce on your SPY. Nice bounce on Nvidia and semiconductors. Decent bounce. IWM, guys, is still ridiculously heavy right now. Still super heavy on the Russell. Still trying to pump, guys. Silver coming in. Silver's about to go negative on the session with that DXY pump. SPY starting to roll pretty heavy here. Potential 20-minute head and shoulders pattern, 30-minute head and shoulders pattern on silver. IWM, guys, just look at the Russell. Oh my goodness, what a fucking short trade that was. Look at that move. That's crazy. Let's look at some of these other high flyers. WDC still coming in a little bit. ASML got wrecked. AVGO trying to find a little bit of support here. Micron top wick distribution. There's a potential head and shoulders trying to trigger on the IWM, guys. Potentially a head and shoulders pattern that is literally triggering right now. Very, very weird. Still trying to hold prior day high level, acting somewhat well. Dollar still trying to press. IWM guys still looking weak, but trying to find a little bit of support here. Still looks like it wants to go lower though. Micron Western Digital doing a good old-fashioned float and grind. STX still holding at the highs of its chart right now. What a crazy range though on STX. I mean, whoops. SPY trying to bounce just a touch. IWM is still ridiculously weak. Our dollar making another push for the highs, guys. DXY making another push. Micron starting to curl down. Nvidia still holding. STX is crazy. What a beast. STX. What a beast. Micron curling in a little bit. Nvidia starting to curl in a little bit. SPY big bounce. Your IWM's trying to bounce here. Looks like a short the pop bounce on the Russell. Silver still trying to see a little bit of sell side pressure. Dollar taking a minor breather on your intraday time frame. Western Digital floating back to the highs. Micron trying to curl back to the highs. Nvidia still holding majority of its gains. You got Apple really struggling on the session, down 0.67. Amazon's flat. Microsoft's flat. Google's up 0.4. Meta up 0.2. Tesla up 0.9. Silver coming in a little bit harder right now. SLV. It's on your Russell 2000. Starting to roll here a little bit, guys. Down. SPY seeing hard rejection off its opening range low. Big bounce on the Russell 2000. Really big bounce. Seagate STX still holding the bulk of its gains. Your dollar is softening here a little bit, guys, so could actually be helpful for the S&P and the markets. We'll see what happens here. Western Digital still flying, or sorry, Seagate still flying, STX. IWM looks like it could try to make a continuation move to the downside. IWM looking pretty heavy here again. SPY getting hit pretty hard here. Nvidia's in here. The Russell's still trying to bounce and hold 264, but looks still somewhat weak, like it could go lower. What else we got going on here? SPY still trying to hold that previous support level. Blur's trying to get another bid here. DXY. Still trying to curl a little bit lower. To touch here, guys. Dollar is getting faded here. See if the Russell wants to retest its lows. It's had a nice bounce intraday. Still looks somewhat bearish. SPY getting a fat candle rejection off of its PDH level. IWM harsh rejection. Invest. SPY's still looking pretty heavy here, guys. Dollar is pulling back quite nicely. STX seeing a little bit of selling. Big drop on your SP sell side pressure. Nvidia's still looking pretty heavy here, guys. IWM still struggling, but trying to defend its lows. SPY is hitting some support here, but still pretty heavy. Nvidia's starting to roll, guys. Nvidia rolling heavy. SPY's still really heavy here. Really heavy. Dollar's trying to bounce again. Nvidia's still looking pretty heavy here, guys. SPY is still struggling here, guys. This STX is ridiculous. Crazy. So strong. Trying to make another push higher here, guys. DXY. Trying to make another push. Natural gas, crude oil is still strong. Oh, did we have crude inventories today? Yeah, that came out already. Interesting. Still trying to bounce here. STX seeing a little bit of selling. Crazy strong still. Microsoft, Amazon, Meta, Google, Apple, all negative, guys. So there is a lot of selling under the hood of this market. Lots of selling. Your US dollar's still taking a breather, backing and filling. All right, a little bit of a sweep of your opening range high on STX. It's starting to come in now as we speak. Oh, I'm out of coffee, guys. Google Max Pain is 327.50. Nice. Interesting. You're getting ready to bubble up on those nat gas contracts? Yeah, natural gas, I mean, there's still a cold front for sure, right? Tricky, though. It's been a cold winter here. I mean, we've had a ton of snow, and it's cold. Nvidia is still curling slightly lower, guys. Still rolling heavy here. SPY still ripping to the downside. Let's see, Tesla's looking pretty bearish intraday. Google's still looking bearish intraday. IWM getting smoked right now. Coming in hot on the Russell. Starts as well. Intraday. Gold silver still holding. Green on the session. $11. Nice bounce for the S&P 500. What's BTC doing? Up 0.2% still, BTC. Let's pull back a little bit. Netflix is still red. ASML keeps bleeding, guys. That's a heavy weight. It's a nice reversal on ASML. AVGO still acting well. Micron still holding. AMD still holding. Oh, excuse me. IWM, nice top wick sell pressure on the Russell. The S&P is still holding structure here. Crude oil trying to make another push here. Buy catching a nice bid here. I'm trying to make a push. Dollar still softening a touch here. Okay, so we still have weakness in the Russell, guys, down 0.43. Yeah, Trump is supposed to be speaking, dang dang. Not too sure, but we'll see what he says. Obviously, he can pump markets. Likely going to pump markets. Trump, usually fairly bullish. Stock is crazy. IWM still curling slightly lower while STX is still ripping here. Crazy beast. Crazy beast. IWM going for another new low of day. Interesting. Dollar trying to make another push here. Consolidating intraday above its pre-market high opening ranges. China stocks still doing well. Nat gas equities are doing really well. Nat gas is up 2.5%, doing quite well. Yeah, PayPal is just dead money. PayPal is crazy. Trump is coming out here, guys, momentarily. I'll play the Trump in the background here. All right, we got Trump queued up. Market squeezing back up. STX new high.
All right, let's get down to business. That's enough of that. But how good is Lee Greenwood? He was with us right from the beginning. First time I walked onto the stage, I heard that song. I liked it. I said, let's use it. That was 10 years ago, and he's been with us all the way. Fantastic guy. There's never been a man that made so much money from one song ever, and I'm happy about it. But I'm delighted to be back in the beautiful Mellon Auditorium, a wonderful family. Tim Mellon is a great guy. He's the current version of the Mellons, a fantastic person. To celebrate a thrilling new milestone for America, the first generation of Trump account children. Trump account children. For the first time ever, we're going to give every newborn American child a financial stake in the future, head start at life, and a fair shot at the American dream, something people don't talk about so much, at least not for the last 4 years they haven't been, but now they're talking about it big. This last period of time, it's been unbelievable. You see what's going on with our economy, the tremendous investments that's been made in our country. We have over $18 trillion coming in. The most, I think, was 3. That was 10 years ago, another country, not even our country. We have $18 trillion, and we have thousands of businesses being built all over the country, and hundreds of massive plants, so big, car plants, AI plants. With the support of the men and women here, and this beautiful room, over the next 15 years, we're going to put $3 to $4 trillion of wealth into the hands of young Americans who otherwise would have really started out with nothing. It's really an amazing thing because it gives young children that start out with really nothing, and we gives them, boy, it's more money than anybody could imagine. From their standpoint, they'll have a real start in life, and that's why decades from now, I believe the Trump accounts will be remembered as one of the most transformative policy innovations of all time. And I've done a lot of them. The tax cuts, we've done a lot of them, more than I think anybody. And I think this is going to be one of the most outstanding. Last summer, I signed the great, big, beautiful bill delivering. It made this possible, too. It actually made this possible. Without it, we wouldn't have been able to do this. Delivering the largest tax cuts in American history, including no tax on tips, no tax on overtime, no tax on Social Security for our great seniors. And, you know, we did another thing. When you buy a car now, you get a deduction on the interest payment if you borrow money. So think of it. Rich people get so many deductions. I'm the king of deductions. I love deductions. But people, middle-income people, never had a deduction before. Now they're getting a deduction on interest. They buy a car. That's going to have a huge impact on the automobile. By the way, there's one proviso. It has to be made in America. If the car is made in another country, no thank you. But they're all going to be made in America pretty soon because we have factories coming in from Canada, Mexico, Japan, Germany, all over Europe. They're all coming here to make their cars because they don't want to pay tariffs. Very simple. It wasn't very complicated. You'll see those numbers starting to produce. That's why you see these massive construction numbers, and soon when those things start opening, you're going to see employment, and you're going to see wealth creation for middle-income people like you've never seen before. Every single Democrat in Congress voted to raise taxes on hardworking citizens. Their whole campaign was raise taxes. I've never heard of it before. All my life I grew up, and I hear politicians, we will cut taxes. This is the only group I've ever seen, we're going to raise your taxes. No wonder they lost. Actually, there were other reasons also. But together with the majorities in the House and Senate, we overcame their obstruction, and we put more money into the pockets of every working American than anyone thought even imaginable. Perhaps no provision of the great, big, beautiful bill will prove more consequential than Trump accounts. Under this program, the U.S. government will automatically create a tax-free investment account for every newborn American child, something that nobody really would have even thought of. There were some brilliant people that thought of it for a long time. They're here with us today. We're going to introduce a couple of them. But nobody really, I mean, I've had friends that the top people in business, they came up to me, whose idea was this? This is great. They said, I never thought of that. We'll fund those personal accounts with a seed contribution of $1,000, which will compound and grow over the course of their lives and could grow into very, very substantial numbers. Parents, employers, churches, states, and loved ones will also be able to add up to $5,000 in additional money for those accounts. And with every modest contribution, Trump accounts should reach at least $50,000 in value by the time the child turns 18, and could be very substantially more than that. With slightly greater contributions, the typical account will grow to $100,000, $200,000, and it can even grow up to past $300,000 per child. And we think most likely, the most likely cases in the $200,000, $300,000 range. The size and scale of this wealth will dwarf all government programs ever created to benefit America's youth. There's never been anything like this. That's why everybody's talking about it. Even really people that truly hate me are making this investment. One person hates my guts. He put $1 billion into it. I said, you must like this program a lot because you can't stand me. I said, I do, but I do like you more than you think. They liked me more in the last year than they liked me before. Although we had a great first term, we can't forget that. We're the greatest economy in the history of our country, but this is blowing it away. So Every president, thank you. Every president in modern history has left our children with nothing but debt. But under this administration, we're going to leave every child with real assets and a shot at financial freedom. We'll ensure that Americans don't just end their lives with a nest egg, but instead all Americans will begin their lives with a beautiful nest egg. There's never been anything quite like this. I want to express my tremendous gratitude to a very special couple who believed so strongly in this vision right from the beginning that they personally donated $6.25 billion. That's $6,250,000,000. Even the 250 is a lot of money when you think. I mean, you know, Nikki, do you hear that money? That's big even compared to rapping, all the money she makes. She's hearing a number like that. She'll say, how many songs do I have to make to catch that? But amazing, amazing thing, $6,250,000,000 to fund Trump accounts for an additional 25 million children aged 10 and under. And that's Michael and Susan Dell, two incredible people. Where are you, Michael? Where's Michael? Stand up, Michael. What a great guy. What a great guy. You know, I tell you, he didn't do it for his business. He did it, I guess, probably would have been better off not to. That's a lot. But you know what? I hope everybody goes out and buys Dell computers. My son, I told you, Barron, he loves that computer. I don't know what the hell you're doing to it, but he likes it. But I just want to thank you very much, and Susan. It's unbelievable, really unbelievable what you've done. So Michael and Susan made this donation in recognition of America's 250th anniversary because there's no better way to honor America's history than to invest in America's future. That's what they did. And this is perhaps the largest, one of the largest, certainly, but perhaps the largest private donations of all time. That's a lot, $6,250,000,000. And somebody did say that. A friend of mine, very rich, he's going to put up $100 million. And he said, geez, you know, think of it, the 250 that Michael has is a lot more than mine. And I haven't even talked about the $6 billion. But anyway, it's amazing when Michael can start off with very little money and build a fortune where he can, you know, routinely make such a payment and investment in the youth of our country. Michael, you're great. Thank you, man.
IWM heading to the basement.
And I also want to say hello to and thank some very special people that have been with my administration and really become friends of mine. On occasion, I have little arguments, but generally, I would say really good. And who's doing, and start off with a man who's doing a phenomenal job, Treasury Secretary Scott Bessent. Scott, thank you very much, Scott. And he loved this right from the beginning, Scott, right? He saw this and he said, wow, what a great idea that is. This is, you know, hundreds of thousands of dollars by the time they reach 18, but we can go 21. They can keep it in longer. But he saw this right from the beginning. He said, wow, this is great. And we have some other ideas that will be great, but this was one that just hit everybody. This was an easy one to think about. And again, that bill allowed us to do this. Otherwise, can you imagine trying to get this approved by Democrats and Republicans? Let's get together. We got it done. Also, a man who's made your life much easier, because those of you that are building plants and equipment so you can give your money, ultimately you're giving your money away anyway, no matter how much you make. But he's made it a lot easier. You know, approvals for big plants used to take 20 years, 25 years, and then you'd get rejected, actually. You'd go 20 years environmentally and they'd reject you. You finally, if I think of it, a guy starts young, he starts an approval process. By the time he's middle-aged, they take a vote and he loses. It's not worth it. But we have a man that's getting these things done in a matter of weeks. And the biggest plants in the world are being built right now, and he's getting them done fast. He's getting electric plants built so that we can buy them. They're paying for them. They want to pay for them so they can open up their AI plants and they can open up their automobile plants, and lesser so. The automobiles, believe it or not, take much less electricity. You're going to have to tell me why you need so much electricity to create information. I said, what's your primary product? Information. Oh, I see. Information. It better be damn good information for the kind of money. But Lee Zeldin is a star, and he has been incredible.
Awesome.
Thank you, Lee. And, you know, I have to say this, Scott and I were talking about it. So Lee went out to California after the fire, which would have never happened if they would have let the water flow from the Pacific Northwest, which everybody's been telling them, including me. Now I just opened it up. We literally sent in the military to open it up. But if they would have let, you wouldn't have had the fires, because you would have had a little thing called the old-fashioned way, water in the fire hydrants, as opposed to empty fire hydrants. You would have had water, and most of the houses had the sprinklers on top. No, there was no water in their sprinkler in their living room. All those fires wouldn't have started. But they did start, and I will say that Lee, the most difficult permit was Lee. I went there a couple of days after the fire, met so many people on the streets who were, in many cases, fairly wealthy people, some very rich people. Some of the best houses in California burned down. And I said to them, so what do you want to do? They said, sir, we want to start immediately. Well, we'll get you permits. Now, the hardest permit, Lee, was the federal permit. Is that right? He got everything done in 20 days, right? The whole thing? Is that a correct statement or less? 20 days. So he got everything done, 100% ready to go. And I went for a meeting, and this mayor, who's a grossly incompetent person, she said, we're going to try and have the permits done within 2 years. Remember that? I got into an argument. I said, you mean within 2 days, right? She said, no. And I'm meeting all these people as I'm walking along the streets with the fire departments and the policemen, and they're all devastated. You know, they're still smoldering. They weren't even allowed to go in their property. The Environmental Protection Agency local said, don't go on your property, okay? We said, it's okay, don't worry about it. Any problem is gone. Any problem is burned. Any germs are burned. They're burned. They were burned. Nobody's ever seen anything like it, but all so unnecessary that it happened. But we got it all done in 20 days, the whole place. And yet now, still, more than a year later, they don't have permits. Almost nobody is building. So I haven't told this to Lee Zeldin yet, but I'm going to put you in charge of getting permits. I think we're going to override the local authorities, because they're never going to have it. And when I was told that there's a provision where you can override the local authority to get things done, in case of, because it's really, to me, it's a national emergency. What they've done to these people is horrible. It's just horrible. And they'll still vote Democrat. Can you believe it? After all, it's just, they get used to it. Although I must say we converted many. We'll probably convert a lot more. But I just want them to get into their houses. And I don't want a big section of the area built into low-income housing. They want to put low-income housing right smack in the middle of it. And that's not the American dream, you know? You didn't do that. And low-income housing is great. I built a lot of low-income housing, but you don't put it there. This is one of the richest neighborhoods in the world, and we're going to let those people. And I recommend it strongly that everybody gets the approval, immediate approval to build a house, and you give them a 10% bonus so they can build a house 10% larger than they had before, if they want, for all the suffering they've been caused, so they can build a little bit bigger house. So Lee, if you want, will you accept the job? He's under a lot of stress. Okay, all right? Override those people. Those people are incompetent. Between the mayor and the governor, they're incompetent. They'll never get approved. They'll never get approved. So do whatever you can, Lee. There's a provision that you're allowed to do it, and I'll sign it in 2 seconds, frankly. It'll never happen. I also want to introduce a man, Frank Pasigno. Now, if you met Frank, and if you knew Frank, he's quiet, but he's actually a stone-cold killer. He was one of the biggest people in business. He would have been sitting with you. In fact, now he's got a better seat because he's working for the government. He's the head of a lot of things, but the job he's done in this country is great, and he's working on Social Security and a thing called the IRS. He's working with Scott on both of them, really, but the IRS in particular, and he is a fantastic man. Where are you, Frank? Took the biggest pay cut in history. He went from being paid $35 million a year to being paid about $35 a year. I think you may have taken the biggest pay cut in history. He'd be close. He'd be one of the top 5, because a few people have done that. Few billionaires have sort of left. But Frank has gone from one of the most successful people. He worked with Jamie Dimon. I don't think Jamie likes me too much nowadays, but that's okay. I never minded that. But Frank, you are fantastic, and you're doing a great job. We appreciate it. Thank you. And thank you to the family. The director of National Economic Council, a man who's in the news a lot. You know, my only problem is I don't want to lose him. I will tell you that he's working from a big deficit because I don't want to lose him. He's so good. Kevin Hassett. Thank you, Kevin. Thank you, Kevin. A friend of mine, a senator who has been unbelievable. She's a tremendous woman, married to a great football player. Her husband is a massive man. This guy, he played in the NFL, I guess, for 11 years. He was top-of-the-line player. I met him. I said, that's not a normal situation. Look at this guy. This guy was seriously powerful, big, and he's as nice as he is big. And she is one of our best senators, Senator Katie Britt. Thank you, darling. From Alabama. I love Alabama. We love Alabama. Marsha Blackburn is an incredible person. Unfortunately, she's running for governor. She's running for governor of Tennessee. I'd love her not to. I begged her. I said, Marsha, we don't want to lose you in the Senate. But I have to say they're lucky. They're lucky to get you because you are a talent and a great person. And you've been with me all the way, and I appreciate it. And you're a very special person. Marsha, stand up, please. And a senator who's a friend of mine, you wouldn't believe that because we went through a rough campaign together. It was nasty. We got along so well, and we actually did joint rallies. Can you believe it? He wanted to get somebody action, so he's smart. He said, would you do a rally with me? But we did joint rallies, and the press used to say, will you ever, start fighting? I said, don't worry, it'll come. He said the same thing. Don't worry, it'll come. He's a very tough guy, very brilliant guy. In fact, when I said, because I had never gone into a debate before officially, my whole life was a debate, but I'd never debated before officially. And I said, let me find out about my competition. Who are these people? Because many of them, they were senators and mostly senators and governors. And I said, well, why don't we start with this guy named Ted Cruz? Let me, he was the best student at Harvard. #1 in his class. He was the best student at Princeton or something. And he was the national debate champion for 3 years. And I said, well, I don't like that. I didn't know that. I don't like that. And he was a very good debater. I will tell you that. He was a smart guy. But I'll never forget, because he was the first one I looked at. I just joined the ranks of politics. And the first famous, that was the Rosie O'Donnell. Remember that? Only Rosie O'Donnell? Ireland, you can keep her. Ireland has done us tremendous. The head of Ireland said, are all your people this way? We don't want that. But Ted Cruz has one thing that I love. If I ever have problems, because it's hard to get people approved, he's a brilliant legal mind. He's a brilliant man. If I nominate him for the United States Supreme Court, I will get 100% of the vote. The Democrats will vote for him because they want to get him the hell out. And the Republicans will vote for him because they want to get him the hell out, too. Where's Ted? Where are you, Ted? And with all of that being said, he's a great guy, too. He's a great guy. We've become friends, and he's a very effective person, too. Thank you, Ted, very much. The man knows more about tax than anybody that I know. Jason Smith, congressman, wonderful person. Thanks, Jason. Thank you, Jason. Great job. Idaho Governor Brad Little, terrific guy. Thank you, Brad. Georgia Lieutenant Governor Burt Jones, who hopefully will be the governor of Georgia very shortly. They have a big race. He's leading by a lot in the polls. He was outstanding as a lieutenant governor. He's great everywhere, and I've endorsed him fully, so I don't want to, do anything that you don't know about. I have given him my complete and total endorsement. Burt Jones, where are you, Burt? Thank you, Burt. Great guy. Chief Design Officer of the United States, Joe Gebbia. Joe, thank you. Great idea, great ideas. Also, we have Mr. Wonderful, Kevin O'Leary. I like Kevin O'Leary. Where's Kevin O'Leary? Come on, Kevin, it's so nice. He's with me 90% of the time, but when he's with me, he's really with me. Great. And we got the TikTok deal done. Who the hell thought we could do that, right? I know. I wish he wanted to buy TikTok so much, and I would have done it, but his price was slightly lower. Slightly. He's fantastic. What a good, you're an entertainer, businessman, you had the whole quality, so I appreciate. I know what you did. Having done The Apprentice, I see you on television, you have what it takes, right? So I appreciate it, and thanks for all the nice things you do. And Cheryl Hines, where's Cheryl? Wow. Married to a very, very powerful, important man. And I said, I'll tell you, Bobby, she's strong. I watched her in an interview. I said, Bobby, you keep him in line, don't you, huh? She said, yes, I do. She's got no choice. He's doing a great job, and so are you. Yeah, he's doing a great job. He's doing a very different kind of a job, too, and he's doing things that people have wanted to do for a long time. And they didn't have the courage, so say hello to Bobby, okay? We're also pleased, my daughter, she went crazy when she heard that this was happening. I want to go. You know, she happens to be in the wrong state right now for that, but when she heard that there's a certain person that's here who's the greatest and most successful female rapper in history, Nicki Minaj. Come on. And, you know, and Nicki makes a lot of cash. Not as much as Michael Dell, not quite. Not as much, but that's okay. But Nicki makes a lot of money, and she's generously stepping up. She's investing hundreds of thousands of dollars in Trump accounts to support the children and really the children of her incredible fans. That's great. Focus on that. Why should you give to somebody else's fans? Give to your fans. I like that. But, and I just think she's great. You know, I've been hearing so much over the years, because I didn't know Nicki, and I've been hearing over the years she's a big Trump supporter and a Trump fan, and she took a little heat on occasion. Her community isn't necessarily, I tell you, we did pretty damn well with that, with your community, as we say. But Nicki has been an unbelievable supporter. She gets almost as much as Mr. Wonderful over here. He's been another one that's been so good. But I'd like to ask you to come up, Nicki. Come on up. Come on. She's been such a great supporter, and a great supporter of Trump accounts. And I said, I'm going to let my nails grow, because I love those nails. I'm going to let those nails grow. She's so good. She's been MAGA. What can I say? She's been with us all the way. Right, Alex? She's been with us all the way. And just want to thank her. And it wasn't so easy. For you, it was easier, right? You want to come up? You want to come up? Mr. Wonderful, come on up here. You've been terrific. Come on up.
Hello. Well, I don't know what to say, but I will say that I am probably the president's #1 fan. And that's not going to change. And the hate, or what people have to say, it does not affect me at all. It actually motivates me to support him more. And it's gonna motivate all of us to support him more. We're not going to let them get away with bullying him and, you know, the smear campaigns. It's not going to work, okay? He has a lot of force behind him, and God is protecting him. Amen.
Thank you. Thank you. Let's stay right here.
On behalf of all the entrepreneurs in America, I'd like to thank you, Mr. President, because we create 72% of the jobs. Companies 5 to 500 employees, and all we care about is policy. We love policy, pro-business policy, and these accounts are fantastic for independence and support. I thank you very much. It's all about the entrepreneur, and I think you know that, sir.
Well, that was great. A little interlude. I don't know. That's better than getting Scott Bessent up. Thank you both very much. Two terrific people. When Trump accounts officially launch on July 4th of this year, every parent will be able to activate their accounts and access the funds at the trumpaccounts.gov. So it's all set up, all ready to go. It's beautiful. The site is beautiful. On that glorious day, we also expect to have commitments from generous private individuals in all 50 states, and they'll be making additional contributions for children in their own states. And already legendary investor Ray Dalio has pledged to adopt the entire state of Connecticut. That's pretty good, Michael. And thank you very much, Ray. Great legend. And today, one of the original advocates of this program has agreed to adopt his home state of Indiana, Brad Gerstner. And Brad's here someplace. Where's Brad? Come on. I think Michael and Brad, would you come up here, please? Come up here. I mean, this isn't exactly Mr. Wonderful and Nikki, but I think they might be worth more money than Mr. Wonderful, right? These guys are worth a lot of money. But Brad is donating, listen to this, $250 to Trump accounts for all children under 5 in Indiana. So every children, all the children under 5, $250, and he'll be donating tens of millions of dollars more in matching contributions to millions of children all across the country. He's going to make a massive donation already. We know what it is. Brad is not only one of the most successful business people, he's the founder of the Invest America Foundation. And he's been working on this idea for years, and he was the one. He went over to see Michael. Michael loved it, and those two were a hell of a team, along with Mrs. Dell, who's been so great, Susan. I also delighted to report that dozens of major employers have signed up to add the Trump account contributions to their employee benefit packages, including Uber, Schwab, Charter Communications, and many, many others. And just today it was announced that Intel, NVIDIA, Broadcom, IBM, Steak and Shake, Coinbase, Continental Resources, and Comcast have all signed up for really big contributions. So I want to thank them. I want to have you two guys come on up. Would you say a couple of words? Brad and Michael, would you say a couple of words? That's fantastic. Only Indiana. You can't do bigger. We love Indiana, but you know, how about Indiana, Iowa? No, we appreciate it. Big numbers. Thank you.
Thank you. Well, 4 years ago, we set off on a journey to reconnect every child in America with the American dream. This president ran on a Main Street agenda that too many people had been left out and left behind. And his articulation of no tax on tips, that doesn't help rich folks. That helps those left out and left behind. No tax on Social Security, no tax on overtime. And when Ted Cruz authored the Invest America Act in the Senate, and Michael Dell partnered with me to bring the private sector to bear on this, we had the opportunity that this president was willing to sign. He immediately understood the impact. That this wasn't about the wealthy folks in America. This was about the 50 million American families who will be lifted up and reconnected to the American dream, because this is now the law of the land. Forevermore, every child in America, from rural Missouri to rural Indiana, from Trenton to Compton, is going to start off life with an investment account at birth, seated with $1,000 where they privately own NVIDIA and Microsoft, all the greatest companies in this country, right? Not dependent on government, independent from government. Not more socialism. The answer to more socialism is more capitalism. This makes every child in America a capitalist from birth, and it would not have happened without the leadership of our Treasury Secretary, Scott Bessent, without the leadership of the Speaker and Ted Cruz in the Senate, but most importantly, and every business leader in America will tell you this, for too long they had no access in Washington to the White House. People didn't want to hear their ideas. This president is voracious in his desire to hear from America's leaders about how to make America better. This is citizen democracy at its best. An idea that started around a kitchen table in Silicon Valley makes its way to this day. I'm humbled and honored to be here, and I'm grateful for your leadership.
Thank you, Mr. President. As you heard from Brad, the fact that this bill got passed itself was a miracle, and it creates a platform for communities, for families, for corporations, for philanthropists to add to these accounts. And in not too many years, essentially every child in America will have savings invested in the greatest companies in this country. And that will change the face of this country over the next 10, 20, 30 years. And we couldn't be more excited about this and the opportunity to make a difference. The best investment a country can make is in its people, especially in its children. And this creates an incredible platform for that to occur at enormous scale. And we're excited to see it all come together. Thank you all so much.
Those are two fantastic people, I can tell you that. I want to give a very special thanks to some of the CEOs here this morning. Vlad Tenev of Robinhood, what a job he's done. Where's Vlad? What a job you've done. Young guy. Nice young guy, too. Arjun Sethi of Kraken. Arjun, thank you very much, wherever you are. Thank you. Anthony Noto of SoFi Technologies. SoFi. Thank you very much, Anthony. Right. These are the ones you read about, and Bill Ackman is here, Pershing Square, and Hock Tan of Broadcom, and so many others that if I name them, we'll be up here all day. But I just want to say that what a job you've all done. Incredible job, everybody. Just about everybody in this room. Not everybody. I'm not in love with everybody, but a couple of them I don't like very much. But if they're here, I'm starting to like them a lot better because they're here for a very good reason. I'm officially calling on all employers all across America to follow the lead of many of these amazing companies and make matching Trump account contributions to benefit for the American worker, and they're going to benefit the American worker so much. This morning, I'm also pleased to announce that Visa is creating a brand new platform which will allow credit card holders to deposit their cashback rewards directly into Trump accounts. That's a big deal. Visa, thank you. Where's Visa? The head of Visa. Thank you very much, Visa. These initiatives could not come at a better moment because there's never been a better time to invest in the United States of America than right now. Who knew it would have happened this fast? I inherited a mess. We were a country that was laughed at a year and a half ago. We were laughed at. Now we're the hottest country anywhere in the world, nobody even close. So, who knew this was going to take place this quickly? Right, Michael? I didn't think it was going to go that fast. I knew we were going to do it, but I thought it would take a couple of years at least. We just a couple of days longer than the first year, so it's really amazing. And just this morning as I'm running out, I see the S&P 500 hit 7,000 for the first time ever. So I say America is back. America is back. Since the election, the stock market has set 52 all-time record highs, adding $9 trillion in value. and $18 trillion of investment is pouring into the country. It's going to be higher than that. Just over 1 year ago, we were a country that lost its way. We were mocked and scorned, and every American child will now be and have access to something that is really incredible, and they can watch directly the economic boom that's taking place. This is a boom that's taking place, the likes of which we've really never seen. I don't think people, get it yet. Not a lot of people, they don't get it. They don't see the thousands of businesses being built, the hundreds and hundreds of massive factories that are going up all over. But they're going to start to see it. They're starting to see it. I mean, if they're modestly intelligent, if they're very intelligent, they saw it about a year ago. With us today is Craig Smith, a fourth-generation family farmer and volunteer firefighter from Culpeper, Virginia, along with his wonderful wife, Heather. Craig and Heather have an 18-month-old son and a 1-month-old that they also welcomed just recently, twin boys. And they can't wait to activate Trump accounts for all 3 of their children this July 4th. Craig and Heather, do you want to come up here, Craig and Heather? Where are you, Craig and Heather? Come on up, Craig and Heather, come on up. Come on up. It meant so much to them. People write letters. Every once in a while you get a letter, it just hits you. Craig and Heather, come on up. Thank you. That's great. Wow, look at this family, huh? They're a rich family now. The kids are richer than the parents. It's the way we want it. I thank you very much. Wow.
We just want to thank President Trump for all of his hard work and dedication to American families and farm families like ours. Farming is not always easy, and sometimes margins are tight, so investments like this into our children really help us to buy diapers and formula and not have to worry about making financial decisions for them this early on. So thank you very much, President Trump.
Thank you very much. Thank you. Thank you. Thank you very much. So nice. Also joining us today is the Goins family from Fayetteville, Arkansas. Charlie works in manufacturing, and he's here with his wife, Savannah, his high school sweetheart. In 2022, Charlie and Savannah opened their home to foster care, really expecting to take in 1 child, but soon they were taking in a family of 3 siblings and formally adopting them. A short time later, Charlie and Savannah also welcomed a biological daughter. Trump accounts will give each of these children a much better start in life. And Charlie and Savannah, where are you? Are you down there? Do you want to come up? Come on up here, Charlie, real fast. We're holding up a lot of big business people. We can't hold them up. Michael will take back his donation. Say what? I want my money back. Come on up here. These are great families, but there's millions and millions of families that are going to be so amazed and so happy at what's taken place. Sort of a miracle, I think. Nice to see you. How are you? How are you? Oh, look at that. So nice. Hi. How are you? You want to say something?
I'd love to, yeah. Thank you, President Trump, for having my family and me here today. My wife and I have spent the better part of our adult lives working to advance children in our community, and it was our faith that first led us to open our home to foster care, and it was God's plan that allowed us, absolutely. And it was God's plan that allowed us to adopt 3 amazing children out of foster care, to welcome so many more, and of course, this past year, welcome our youngest daughter, Florence, into the world. It's through our experience that we've seen how opportunity, or the lack thereof, can really impact a child at the very beginning stages of their life before they even get a chance themselves. And that's why, my wife and I, along with some of the work that the First Lady is doing, we are working to help foster families, foster and adoptive families, and personally in our state with protections and support in our home state of Arkansas. Every child deserves hope, stability, and a strong chance at a future, a strong future. And for young families, especially like ours, that your first priorities are, of course, your diapers and your wipes and your car seats and all that stuff. And so starting and investing into a investment account is not necessarily on the top of the priority list. And we're so thankful to have this. And I think this sends a powerful message that this administration believes that financial opportunity can start early, that it is intentional, and that it can impact every single family. And my wife and I are so excited that this administration has placed families and children like ours at the forefront of economic policy. And we're so excited for the future of the children and for this country. Thank you.
That's a great job. I was wondering how much longer he could. Did you notice it? It's getting heavy. It's still 50 pounds or something. Right? I said, how much longer is that? And finally, it broke loose. But you could see a loving father there, couldn't you? Huh? The way he did that, right? Wasn't that a loving father? I watched that. He was grabbing. That's a great family. Thank you very much, both. Beautiful. So in conclusion, the ultimate success of the Trump accounts will be measured not just in the wealth created. It will be seen in young people buying houses that they could never have even dreamed of buying. It'll be seen in diplomas earned, companies founded, families formed, and more babies born. It'll really be seen in something where you're given a chance. You're given a chance at life, a very good chance. Above all, Trump accounts will help bring the hope and prosperity to every community that every community wants to see. And it'll bring back the American dream. The American dream is so beautiful. I would mention it all the time when I'm running. Whenever I run, I talk about the American dream because that's what we want to create. Others don't talk about it. But we have the American dream back, I think now, maybe better than ever before. For generations, Washington politicians have done nothing to take from the hardworking people of our country. They take and take. They do nothing but take. They've made workers' lives harder, sent prices higher, pushed your dreams out of reach. And both parties, they didn't do the job that they were supposed to do. Some were fighting, and sometimes we fight against some of the great politicians we have here. They fight with me, most of them, and we fight to make things better. But we run into walls of other politicians that either don't want to do something or they almost feel like it's a destruction of our country. But now we're doing something much better than giving the next generation a handout. We're giving them ownership of America's future so that they can grow up, chart their own destiny, and make our nation greater and stronger and better than ever before. So I just want to thank all of the people that participated today, the great business leaders, the great celebrities, and all of the people that are in this room. You've done so much. And I just want to also give a little bit of a shout out to a lot of great politicians that are right now voting on some very important measures, plus the politicians in this room. They have really worked hard on this. This is something that it's amazing that it got done. If you knew the political process, it was very complex, very hard to get done, to get all of those votes together. But we did it, and it's going to be great for America. And Brad and Michael, thank you both very much. Special, special people. Thank you very much. And God bless everybody in the room, and God bless America. Thank you very much for being here. Thank you. Thank you.
All right, guys. So nice sell program hitting the tape here intraday. Basically, S&P has rolled over. Lots of weakness and sell side pressure hitting your mega cap tech. QQQ is still positive though, but your IWM and SPY are negative. Their dollar pulling back slightly. Gold going for 5,300. Silver trying to make a move. STX a beast holding steady. UNH has had a nice bounce. Acting very well. Yeah, the market is still set up slightly bearish here. I mean, we've broken a pretty key support zone right now on the hourly chart. We're piercing it. So it's a big trend line, kind of a failed breakout, so to speak, at the highs. So, I mean, they could easily take the market into this gap fill here, which is at 692.69, give or take. So we'll see. It's going to be the biggest rally for 2 weeks in gold and silver, or the market, Dom? In what? Still ripping. New highs. 5,300. Oh, never mind. Gold did hit 53.11 in the pre-market there. Ah, interesting. Nice bounce in the Russell. Micron still charging higher. Still struggling, down 1.13%. Microsoft still holding steady. Micron still a monster up here. Gold, silver still squeezing. Nice bounce in your S&P. Right, so your dollar is pulling back here, guys. S&P 500 is catching a nice bounce here. Gold's still charging higher. Silver 114. Apple, Google, Meta still struggling. Uh-oh, getting more snow, guys. Looks like we better buy nat gas. Nice move down on STX, starting to brew. The market's still struggling here, guys. We're starting to see some profit taking in Western Digital WDC. Nvidia's bouncing, STX pulling back slightly, but still ridiculously strong and bullish. You got Microsoft, Amazon struggling, Apple struggling to take down 1.14, Google down 0.25, Meta down 0.4, Tesla's still green on the tape. Nvidia is still trying to defend 190.50. Yeah, WDC is running in sympathy to STX today and that complex. STX is starting to roll a little bit more, guys. STX is starting to roll a touch more. All right, guys, I'm going to take a break. The market's probably just going to stay sideways here into the Fed meeting. So it's 12:16. I'm not expecting too much until we get Powell. And we'll see what happens. All right, guys. So I'll be back, about 30 minutes before the Fed decision, 1:30-ish. If anything crazy happens before, I'll jump back on. I'm always here. Yep. See you later, Dom. I'll keep SPY and gold up here since those are Your two main things that people are looking at these days. Gold is still ridiculously strong. But keep your eye on that Dixie because that dollar is trying to move up today. It's had a nice rally off of the lows. But what's super impressive is gold is still holding. I know the dollar is still pretty depressed down here, but it's recaptured a key trend line going back 14 years. So we'll see. But it wouldn't surprise me to see a little bit of profit taking since the dollar is ripping here. And keep in mind the VIX, guys. The VIX is still green on the session. And that's obviously means we could see more sell side pressure hit the tape at some point today. Um, but you can see we've broken all of the pre-market levels, opening range low, pre-market low. So the market is structurally slightly bearish right now. All right, we'll see you in a bit. If anything crazy happens, I'll jump back on, guys. All right, guys, we have about 30 minutes here till the Fed decision, which is going to be a hold of rates. But the big question is what's going to happen in the market for future rate expectations? All right. A little bit of volatility creeping into the metals right now. We're seeing a little bit of profit taking hitting the gold tape as well. Gold seeing some minor selling. Metals are coming in a little bit heavier here, guys. Did you catch the Carvana short today? CBNA, I mean, oh my goodness. That would have been a home run. Grand slam. Look at that move. Down crazy today. 19.62%. Ridiculous. Ridiculous for sure. So silver just went briefly negative there, guys. Silver. Interesting spot for silver. You'll wonder if it's going to get a pump, or I think there's a lot of people trying to buy the dip still. Anticipation of a big spike, dovish pow, which could happen for sure, but remember, it's still super extended. Let's look at the Qs here real quick. QQQ is still your strongest indice. IWM is still struggling. Trying to move up off of the lows. It's going to be an interesting report for the Russell as well. Very sensitive to interest rate policy. US dollar is trying to go for another high of day. Push here. Gold selling off pretty sharply here. 20 minutes till the rate decision. There will be a little bit of a spike off of that announcement. And then that move usually is fairly muted compared to the Powell reaction. And you usually either pop or drop off the rate decision small, and then it basically gets bought up or sold into wherever you were right ahead of that interest rate decision. Did have some hawkish rhetoric from Besant this morning regarding BOJ Japan. Silver is starting to get a little bit heavier, testing its pre-market low. It's still seeing a little bit of selling here. Just some sell, a little bit. Silver selling off a little bit harder than gold right now. Dollar's still pressing here, guys. It's forcing the indices a little bit lower here. Still causing silver to sell off. Decent amount. 14 minutes till the rate decision. VIX is spiking. Dollar spiking. US dollar is still ripping here, guys. Squeezing into prior day high. Look, it's still looking vulnerable here. Silver still selling off pretty sharply. Silver now down 1.35%. Rolling slightly heavier. You're looking at SATL. Peter's looking at SATL. Let's take a peek. SATL. Yeah, nice strong daily chart. It's definitely broken out. Aerospace and defense. Yeah, this one could squeeze. Nice find. It's just starting to break out of a pretty big stage 1 base formation. Important day for it. We'll see if it stays elevated. Right, 7 minutes till the rate decision. Still seeing the market acting a little bit vulnerable here across the landscape. A small reaction here at 2 o'clock. It shouldn't be that big, but we never know. Usually the Powell movement is much, much bigger. So you're going to get a small influx of volume. Notice how the volume is really thinned out on SPY. It's going to start to uptick a little bit here on the intraday time frame in 3 minutes. 3 minutes. Dollar still super strong heading into this. Natural gas down, silver slightly down, gold still ripping up 1.9. Yields are green, Bitcoin slightly green, IWM, SPY, Dow all red on the session. Interesting. right, 2 minutes till some extra volatility. 2 minutes. Go. Volatility creeping in here. And guys, there's no change in policy. IV's spiking all over the place. It's not wise to jump into really anything just yet, but they did hold. Gold and silver, IV. Gold's moving up, but IV on the puts are still increasing. Interesting. Dollar getting rejected, gold and silver bouncing. Pretty wicky, guys. We're getting very wicky here. Nasty sell in the metals starting to take hold and SPY. Metals are bouncing around. SPY getting liquidated here. Oof. That's a pretty big reaction for this. It's a really big reaction, guys. On SPY. Dollar still trying to spike through prior day high, but there's definitely some resistance. Lots of volume coming in, guys. Big dip, big pump. The better reaction to trade is still with Powell. Oh, excuse me, guys. Bless me. So the market again is pretty much settling in where it was before the rate announcement. Dollar is still pumping here, so could force the markets actually lower. Here DXY is still pretty strong, guys. And there's a strong game plan, guys, to fade the next move. So when Powell comes out and speaks, often if there's a pop or a drop, you kind of do the opposite. It's a very successful strategy on FOMC. So if we pop, often it's a fade. If we drop, often it's a buy. We got a little bit of a IV crush here. People got caught, shaken out, but the big move hasn't happened yet. Or your DXY guys is still pumping through prior day high. Very, very strong. Gold and silver still trying to wick around, hold most of their value. Silver is slightly negative. Apple, Google, Meta struggling. Tesla still holding strength. Nvidia is still chopping sideways. Nice reversal. Very, very bullish. $17 minutes till Powell. What color tie? Hey, Sarf. What color tie is everyone betting on? Purple? You just got a WeBuy looking good on the 15 minutes for a TP of 225. Nice. Yeah, we're going to get a lot of volatility here momentarily, but it is looking solid intraday. Very strong. Momentum. Breakout there. Could easily go new high of day if the market reacts in kind to Powell. Where is, let me just check something here. Oh, yeah, I need to get the meeting up. I need to get the meeting up here. Queued up in the background. 15 minutes to go. 15 minutes to go. Big bounce in silver. Big bounce in gold. S&P just basically trading in the middle here. Middle and diddling. Anybody taking any lottos in advance? Again, one of the reasons why it's often very expensive to short or long ahead of time the indices and a lot of these ETS is because the IV right now, guys, is just being juicing these contracts on both sides of the trade. So that's why usually you get that pop or drop which reverses. So, but I'm going to be looking if the S&P pops here intraday, um, you know, anything near this pre-market low area, I'm going to get very intrigued to start taking some lotto put options. And then vice versa. If we drop suddenly and sharply kind of into this 691, maybe 690 zone, I'm going to look for taking some out of the money calls. So that's my plan. I'm looking at 692 puts, 0 DTE. If we pop up, I'm going to look at 692 puts. If we drop, I'm going to look at 697 calls. So I'm just going to be doing pretty much the opposite here. I feel like Powell's going to come out somewhat hawkish though, specifically with Donald Trump's comments yesterday about the dollar, trashing the dollar. Powell doesn't really want to see the dollar too weak too quickly because it makes his job of fighting that inflation a little bit more difficult. But who the heck knows? Again, it has been a gap up and sell off. I mean, to think we were all the way up here in the pre-market high around 698-ish above that, pretty crazy. $11 minutes. Right now, there's that's crazy. 13,700 contracts open at the 690 put on SPY. There's also 15,000 at the 700 call SPY. 688, there's 4,000 contracts open at the 688 call. So in the money calls, it's all over the chain here. Whoa. Lots of speculation. 680s. That's insane. 7 minutes. Five minutes till showtime. Because it's a good macroeconomic indicator. It's been the leading asset of the market, so I want to see how that reacts. SPY and gold. It's the two most important things right now in terms. This is a macro event, so gold's a macro asset, and it's been the trending asset. So, again, the market's looking towards that June meeting because that's likely right now the probabilities of the next rate cut, when the next rate cut is, June, July. So the market is going to look to see, okay, does that get moved forward or pushed back? If it gets moved forward, shit's going to pump. If it gets pushed back, that's where fundamentally we could definitely re-rate, specifically around IWM. You'll likely also see metal sell off a bit. So it really, dovish, we're going to pump. Metals will pump, silver will pump, gold will pump, markets will pump. But if he starts to defend that US dollar, it is hitting a 14-year support level. So it's going to be interesting. I don't think we're going to have a small move. Let's just say that. I think it'll be a pretty decent move. Again, I'm looking at fading. Even if gold pops, I'll probably fade it. Just S&P pops, I'd fade it. If it drops, probably go in for a little bit of a dead cat bounce. It's just how I'm trading it. You think DXY is going to pump and metals will dump? Yeah, I mean, Dixie's been strong all day. It's up 0.93%, running into prior day high right now. And gold hasn't even reacted. Gold's still up 2%. So, where can they sell the most liquidity right now? Probably in metals. But metals are still gung-ho bullish. Gung-ho bullish. Alright, they've been crazy. But yeah, I think the metals also still need to take a breather. and likely could today, but we just don't know what Powell's going to do. And Trump kind of gave the metals another kiss yesterday by a lot of FinTwit memes going around that Trump's trashing the US dollar. And he never trashed the US dollar, but he didn't really firm it up either. Alright, S&P negative slightly going into the tape, basically flat. IWM down by 0.23 and QQQ still green, up 0.35. Amazon struggling, Apple struggling, Meta struggling, Netflix struggling. Google green but flat. Tesla up 0.85, Microsoft up 0.16. Remember, we also have earnings after hours, guys. We got Mr. Meta, Mr. Tessie, and Microsoft. I mean, to think Fed days are not volatile enough. Yep, here we go. Here we go. Let's get ready to shake and bake. Still waiting for Powell. I think we're about to start. Here we go. Here we go. SPY's ridiculously selling hard. Dollar pumping. Powell comes out, purple tie.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. The temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter. In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well.
Yeah, they might dump it.
Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
Hi, Chris Rugaber at Associated Press. Thank you. I wanted to ask that, you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so. So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting jobs, which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized? Thank you.
So, yeah, really two questions. One is, so we're getting through the distortions in the data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there. The reason why we changed the statement, let me pull it out, was simply it used to say that judges that downside risks to employment rose in recent months. So we saw data coming in which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling. And so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has improved.
Y'all are getting faded here.
Clearly improved since the last meeting, and that should matter for labor demand and for employment over time. So for those two reasons, we thought we would take that language out of the statement.
Nick Timrose, The Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today on I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it. So I'm just not going to. This is really about the press conference and the economy and what we did today, and some ancillary areas, but I'm not going to be getting into that.
Can you say whether the Fed has responded to the subpoenas?
I have nothing for you on that today.
Mike.
Michael McKee from Bloomberg Radio TV. Have you made a decision on whether you would remain as a governor of the Federal Reserve? And if so, would you tell us what it is? And if not, when might we anticipate a decision?
This is big.
No, and I really, once again, have nothing for you on that today. That either.
Why would you want to leave it all under the circumstances?
Again, I don't want to get into this. It's not something I'm. There's a time and place for these questions, but not something I'm going to be getting into today. Thank you.
Thank you. Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might, lead to a similar answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the U.S. currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role. So, I have nothing for you.
But, what's your view on the market movements? What do you think behind them? Is it asset managers diversifying? Is it?
Yeah, I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department has that. It's their role, their bailiwick, and we stay off it. We do monetary policy and some other things, but we don't comment on the dollar. Sorry.
Neil.
Yep, pretty bearish.
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market in the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, first of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the beige book, everything comes in suggesting that this year starts off on a solid footing for growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting we're evidence of stabilization. So it's overall a stronger forecast, really, if that's your question. I'm not sure I answered your question.
But in terms of timing or pacing of any additional easing?
So we haven't made, what we'd say about this was that after this meeting, after the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based on the incoming data, the implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
Steve.
Steve Leisman, CNBC, and sticking with questions you might answer. Thank you. You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look at the longer run, the SEP and the longer run rate, 16 of 19 officials are actually below there on their long run. Is the Fed still in a process of bringing it down towards a middle range of neutral? And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that. Maybe I missed by 1, but I thought it was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates. This is the higher end of that range, but so for some people they think it's neutral. I think And many of my colleagues think it's hard to look at the incoming data and say that policy is significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. You know, it's in the eye of the beholder, and of course, no one knows with any precision. Is that, you had a follow-up?
I get what you're saying, but some officials have described the Fed being in a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the SEP from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 175 basis points we've cut since we began cutting in September of 2024. So you've moved now to, you know, Fed funds is running just a little below 3.65%. So you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
Amira. Thank you, Chair Powell. Mara Mokway from Bloomberg News. To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today. We're not trying to articulate a test for when to next cut or whether to cut at the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook, and all that. And we're in a position where we still have some tension between employment and inflation, but it's less than it was. I think that the upside risks to inflation and the downside risks to employment have probably both diminished a bit. So, we'll be looking at that. It's about how you weigh the risks to the 2 goals and how big those, and quantify them. And so there are different views on the committee, and, we'll find our way forward as the data evolve.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Has the effects of tariffs already moved through the economy on prices?
Big squeeze.
So basically, there are many different estimates, and they're all highly uncertain. But most of the overrun in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand, and that's a harder problem to solve. We
ZSL? No, I'm not in ZSL.
Likely to move through and be a one-time price increase. So most of the overshoot, if you were to take that out, inflation, core PCE inflation is running just a bit above 2%, ex the effects of tariffs on goods. And the other good news is, if you look away from goods and look at services, you do see ongoing disinflation in all the categories of services.
Pinned in pretty much the same spot.
That's what's going on
as it was.
The expectation is that we will see
shenanigans.
The effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases that are begun. And that's what we expect to see over the course of this year. If we see that, that would be something that tells us that we can loosen policy. Also, if we see something that suggests that the labor market is not stabilizing, that in fact the downside risks reemerge, or the data just get worse, we'd have to look at both of those. We have a 2-sided mandate.
If I could, if President Trump does pick a new Fed chairman before May, what does that look like? How would you work with that person, and what does that transition period look like?
I don't have anything for you on that. That will depend on Congress's actions and things I can't speculate on.
Howard Schneider with Reuters. Thank you for taking our questions. Given the changes in the statement and all you've said so far, is it fair to describe risks to both sides of the Band-Aid as roughly balanced right now? And is the next move necessarily down?
I'd say that the upside risks to inflation and the downside risks to employment have diminished, but they still exist. So there's still some tension between the mandates. Are they fully in balance? Hard to say. And we think our policy's in a good place. I've just discussed reasons why we might change our policy, and we'll just have to see how the data lead us.
I'm wondering, you a minute ago you said you felt expectations were consistent with your mandate. That the 2 and the 10-year break-evens have moved quite notably in the last couple of weeks, I believe. Is there any concern on that front?
I mean, I recently looked at all of the both survey and market-based short-term inflation expectations have come way down. They were in a good place at the beginning of last year. They spiked around Liberation Day, and now they've fully retraced in the last few months. So that's very comforting. And the longer-term inflation expectations have remained in places that are very consistent with 2% inflation over time. So expectations have been solid, and they reflect confidence in the return to 2% inflation.
Andrew. Apologies if this is a little bit repetitive, but in the past you've said that the reason you cut rates was that the risk to the labor market was greater than the risk to the inflation side. Is that still true?
We haven't made. You're right. We saw the labor market weakening, and we acted, and I think that was the appropriate thing to do. We will always act to address what we see as the economy moving away from our goals. Risks to both of the variables are a little less. I think the upside risk to inflation, again, a little bit less, and the downside risk to employment, a little less. I just would say that I'm not making a judgment about how, one of them is more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks. BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures in ways that previously they hadn't because of policy uncertainty. Do you agree with BIS?
We really don't see much at all about that whole story. There's just not a lot of data that suggests that there's much to that.
Thanks.
Anna Swanson with the New York Times. Can you talk more about what you would need to see in the labor market to conclude it's time to resume easing? Do you need to see further deterioration in the labor market, or would it be enough for inflation to soften?
So we'll always be looking at both things. And so there could be combinations, infinite numbers of combinations that would cause us to want to move. Certainly, a weakening labor market would be an argument for loosening. But what's happening with inflation? If inflation were at the same time getting worse, you just have a very difficult situation there. So we'll be looking at both. Clearly, a weakening labor market calls for cutting. A stronger labor market says that the rates are in a good place. We'll have to be making similar judgments, too, on inflation, though.
And if inflation does pick back up and the labor market doesn't show further signs of deterioration, is there a chance that you could raise rates rather than simply remaining on hold? What would you need to see to consider hiking?
We don't take things off the table, but it isn't anybody's base case right now, anybody's base case, that the next move will be a rate hike. But, ultimately we'll do what we think is the right thing. But that's not where people's expectations are right now.
Victoria.
Hi, Victoria Guido with Politico. I wanted to ask, you've talked in the past about concerns about the U.S. fiscal trajectory, and we've seen in the Japanese bond market a lot of turmoil recently, in part due to concerns over their fiscal and long-term economic outlook. So do you worry that the U.S. could at some point find itself in a similar situation to Japan, whether for fiscal or demographic reasons?
Over time, you've seen that U.S. rates have remained they haven't moved a lot really for a while, but they haven't moved a lot because of what's been happening in Japan. So it's more of an over time thing. The U.S. federal budget deficit is, uncontroversially on an unsustainable path. The level of debt is not unsustainable. It's very much sustainable, but the path is unsustainable. And the sooner we work on it, the better. But right now we're running a very large deficit at essentially full employment, and so the fiscal picture needs to be addressed. and it's not really being addressed. So that's important. I'm not in any way connecting it to some sort of near-term market event, but ultimately, it's something we'll have to deal with, and that in the end game, that's where you wind up, is in some kind of a difficult thing. But that's not where we are. It's not where Japan is either. But it's certainly not where we are right now.
Does it reduce the effect of your rate cuts that longer-term rates have overall not really budged that much?
I wouldn't say that. The thing is, technically, higher longer-term rates means less accommodative financial conditions. But remember, many things move longer-term rates. It's not mostly what happens on the short end. There can be effects of longer-term rates from our moving our policy around, but it's much more assessments of the fiscal path and fiscal policies and risks and things like that move the 10-year around. You can look back at and find periods where we've been very actively moving the policy rate over the course of a year, and over the course of that year, the 10-year is exactly where it started. So there's not a tight link between 10-year rates and the overnight rate.
Elizabeth. Thanks so much, Elizabeth Schulze with ABC News. Republican Senator Tom Tillis, who sits on the Senate Banking Committee, said he will block any Fed nominee, including the chair, until this investigation into you is resolved. Do you support this move by the senator, and what conversations have you had with the senator?
I've got nothing for you on that.
More broadly, what would happen to American households if the Federal Reserve loses its ability to operate independent from politics?
So really, the point of independence is not to protect policymakers or anything like that. It just is that every advanced economy democracy in the world has come around to this common practice. It's just an institutional arrangement that has served the people well, and that is to have a separation between to not have direct elected official control over the setting of monetary policy. And the reason is that monetary policy can be used, through an election cycle to affect the economy in a way that will be politically worthwhile. So I'm not talking about the U.S. context. This is every advanced economy democracy of any size. So it's a good practice. It's pretty much everywhere among countries that look at all like the United States. And I think if you lose that, first of all, it would be hard to restore the credibility of the institution. If people lose their faith that we're making decisions, only on the basis of our assessment of what's best for everyone, for the wide public, rather than trying to benefit one group or another. If you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important, and the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.
You're confident it can maintain that independence at this point?
Yes. I'm strongly committed to that, and so are my colleagues.
Archie.
Thanks. Archie Hall from The Economist. On that sort of stabilization of the labor market question, how much do you see the weakening we saw over the past 6 months, year, as a kind of data mirage around immigration and the government shutdown and so on that's now resolved? Or how much have we seen a kind of real underlying firming up in the state of the labor market, do you think?
Well, part of it is, to your point, part of it just is that labor supply, growth in labor supply has come to essentially a halt from a fairly fast clip of growth over the last couple of years, driven by immigration, and then the halt being driven by a very sudden stop in immigration. So many outcomes were possible with that. Supply came way down. It turns out that demand for labor also came down a very similar amount, maybe just a little bit more, which is why the unemployment rate has gone up. So I don't know whether that's a coincidence or not, but that's what's happened with that part. But if you look at other things, like, for example, just to pick a couple, the Conference Board's measure of job availability that came out, I don't know, was it yesterday or today? But, it shows, it's a survey showing that workers feel like job availability it's a very low reading. It's just one reading, but it's an indication of softening. People, part-time for economic reasons, which is a category within the broader U6 category measure, has moved up significantly. So there are lots of, and I could go on and on, there are lots of little places that suggest that the labor market has softened. But you're right, part of payroll jobs softening is that both the supply and demand for labor has come down. Growth in those two have come down. So that makes it a difficult time to read the labor market. So imagine they both
Burn that theta,
to the
yep.
point where there is no job growth. Is that full employment?
We're going
In a
up,
sense
guys,
It is.
I think.
If demand and supply are in balance, that you could
They
say
get
that's
another
full
5-minute
employment. At
candle
the same
close
time,
above this.
do we really feel like that's a maximum employment economy? It's a very challenging and quite unusual situation.
Thanks. And one more on growth and the kind of strong growth outlook, or strengthening growth outlook you're now seeing. How much of that is the fiscal stimulus we're seeing from the beautiful bill, the tax cuts, and all of that?
So you're seeing it already. You don't have much of the fiscal. I think the outlook, you're right. It's financial conditions, and it's fiscal policy for 26. But you've got
We're collapsing.
consumption that's been happening before financial conditions have been supportive, but before the fiscal effects really are shown. So essentially, the economy has once again surprised us with its strength, not for the first time. Consumer spending, although it's uneven across income categories, but consumer spending overall numbers are good, and we're benefiting from the AI build out of data centers. That's another thing we're benefiting from, but. The economy overall, the growth is on a solid footing. It looks like, and it's not just those things. It's just the consumer is filling out surveys that sound really negative and then spending. So there's been a disconnect
candle close
between downbeat surveys and reasonably good spending data.
Thanks, Chair Powell. Christine Romans from NBC News. You talked about how consumer spending is uneven. The president calls inflation defeated and solved. The FOMC says it's a somewhat elevated inflation. But you talked about those customer survey or those consumer sentiment surveys and public opinion polls that show that most families say the cost of living is still issue number one. What is the conversation around the table with your colleagues about how wealthier consumers seem to be driving so much of the economy, and why so many families still feel like they just can't make ends meet after 5 years of rising prices? What is that discussion like?
So a couple things. One, there's something to it in that we know that higher income households that tend to own real estate and tend to own stocks, securities, and those assets have been going up in value, and increases in wealth do support spending over time. So, and that's clearly a part of the story. We also know that for some time now, for a year or more, we've been hearing from retailers, for example, that serve lower income customers, whether it be food or the big box stores or anything. They're saying the same thing, which is our consumers are looking to economize. They're trading down from brands, and they're buying less, and it's changing their buying habits and that kind of thing. So we're seeing that, and that is a reality of what we're seeing. They're still consuming, but they're feeling it in a different way. I would say more broadly on affordability, we have a vast network through the reserve banks and also through the Board of Governors where we talk to small and large businesses and households, and so we do hear a lot about affordability, and we take that very seriously, and we take it to heart because one of our jobs is price stability, and so the best thing we can do for people who are feeling that squeeze is to keep inflation under control and, frankly, to finish the job of getting inflation back down to 2%.
You mentioned the AI build-out as being positive for economic growth this year. I wonder, as you look at the weakest year last year for job creation of a non-recession year since like 2003, are you concerned about AI maybe supplanting more entry-level work and entry-level jobs, and how does that play into what you're watching about the labor market?
So everyone, of course, is watching AI and the deployment and, trying to understand exactly what's happening. And there's a wide range of possibilities. It's hard to say. And of course, anyone who uses it is amazed at what it can accomplish, right? So every technological wave will eliminate some jobs and create other jobs. And it's always been the case. If you look back, wave after wave after wave, there will be some disruption, but ultimately technology increases productivity, which is the basis for rising wages. And it may not all happen immediately, but over time, it's what enables incomes to rise over time is rising productivity. So and we always ask, well, this is going to be different, is it going to be different? And we don't know. And we may, in any case, see in the short term jobs that are being eliminated by the capabilities of AI. We may see that. We just don't know what the overall effect is going to be. So how to think about it in macroeconomic terms, it's very hard. We can look at the aggregate data. We can analyze, for example, there is some connection, it appears, between the low hiring rate for recent college grads
People are imploding.
And AI, but it's not the main or only driver. You hear large companies, though, many of them saying that they either won't be hiring for some time, or that they're hiring less, or that they're laying people off, and they tend to refer to AI when they do that. So we're all watching and learning, and it could certainly have pretty significant effects on the economy, the workforce, and our society. We don't really have the tools to address the concerns that may arise, but we have a lot of people who focus on analyzing it and try to understand what the macroeconomic implications are, which is our job.
Thank you, Chair Powell. Bayi from AFP News Agency. You mentioned earlier that on inflation, the broad expectation was for a one-time price increase and then for inflation to come down. And I was wondering, is your expectation still for inflation to start cooling in the second half of 2026? And if you could elaborate how far we are from target currently. Thank you.
So how far we are from target is, as I mentioned in my opening remarks, we had 3.0% core PCE inflation over the 12 months ending in December, and that's pretty much what we had the year before. So on net, no progress, but the story behind that is modestly positive in that most of the overshoot was in goods prices, which we think is related to tariffs, and ultimately we think those will not result in inflation as opposed to a one-time price increase. Okay, so that's where it is. In terms of, you asked, no one thinks they will, ex ante understand really clearly, precisely when this will happen. But there's an expectation that sometime in the middle quarters of the year, we'll see tariff inflation topping out. So what we do is when a tariff is put in place, we track the effect of those tariffs over a 6, 7, 8, 9 month period, and you can see for that tariff how long it takes to reach a place where it's affected the price level, and that's it. So we're getting better at that, and our estimate is that it'll be sometime in the middle of the year, but I wouldn't look for great precision in that. But we'll be able to see whether things are moving in that direction. I think we'll be able to see.
Richard Escobedo.
Thanks, Chair Powell. I'm Richard Escobedo with CBS News. I want to look outside the U.S. about what's happening outside our shores and how it impacts the U.S. Canada's Prime Minister said last week that there's been a rupture in the global order, and I wonder how you're thinking about geopolitical risk as it relates to the U.S. economy.
So I can't comment on that speech or statement or anything like that. Geopolitical risk for us is a lot of it is around energy, oil. And so far, we haven't, for all the turmoil, oil prices have come down, as you know, and so we don't really see much. Longer than
Get out here.
It's trade, and the trade, the economy, our economy has pulled through pretty well, you'd have to say, given the very significant changes in trade policy. The U.S. economy has pushed right through. Partly that is that the way that what was implemented was significantly less than what was announced at the beginning. In addition, other countries didn't retaliate, and in addition, a good part of it hasn't been passed through to consumers yet. It's being taken by companies that stand between the consumer and the exporter. So that's where that is.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. With third quarter GDP growing at 4.4% and the fourth quarter expected to have a 5 handle on it as to what the Atlanta Fed is predicting, at a time when you had a government shutdown and we thought that was going to shave off some growth, you've also got the fiscal tailwinds you've talked about, big tax refunds coming, potential tariff dividend. How could you cut rates and not spur inflation in that environment?
Well, we didn't cut rates today, but it depends on how fast potential output is growing, right? I'm just asking in principle. I'm not saying this is what's happening, but there's growth and there's how fast the potential is growing, and at a time of high productivity growth, potential output is rising. So it really matters whether potential output is growing as fast as actual output. And it would matter over time. The numbers you cite were for quarters, and quarterly GDP is, you need to look at 12 months because quarterly GDP can be very lumpy. GDP was negative in the first quarter last year. So the overall, over the year, the numbers were nothing like that. It was more in the mid-2s for the year.
And how do you explain the divide right now between strong economic growth and the job market? Is it productivity that's filling the gap? And is productivity being driven by AI at this point?
So you're right, there has been a divide of solid growth, but what looked like a weakening labor market. And that can be explained by rising productivity. But I would say we do see signs of certainly of the unemployment rate stabilizing. So it may be
melting up
the resolution of those two things. Also, as you probably know, the lore is that when GDP and the labor market get into an argument, in the end, the labor market data is more reliable. GDP data is just very hard to collect and understand, but nonetheless, I think we may be seeing that tension resolving a little bit. Too soon to say with any confidence, though.
Matt Egan with CNN. Chair Powell, after today, you have 2 meetings left as Fed chair. You've obviously experienced a lot during your time as Fed chair, served under.
Here we go, guys. Could be a big spike here.
What advice you have for whoever your successor might be?
Honestly, I'd say a couple of things. One is stay out of elected politics. Don't get pulled into elected politics. Don't do it. And that's another thing. Well, another is that our window into democratic accountability is Congress. And it's not a passive burden for us to go to Congress and talk to people. It's an affirmative, regular obligation. If you want democratic legitimacy, you earn it by your interactions with our elected overseers. And so it's something you need to work hard at, and I have worked hard at it. So, and the last thing is, it's easy to criticize government institutions so many ways. I will tell whoever it is, you're about to meet the most qualified group of people you not only have ever worked with, you will ever work with. And when you meet Fed staff, and not everybody's perfect, but there isn't a better cadre of professionals more dedicated to the public well-being than work at the Fed.
Thanks for that answer. If I may follow up, as I'm sure you've noticed, gold and silver prices have experienced historic gains of late. And I'm wondering how much attention, if any, you pay to those moves and what message you may take from these significant price increases we've seen for precious metals.
Don't take much message macroeconomically. The argument can be made that we're losing credibility or something. It's simply not the case. If you look at where inflation expectations are, our credibility is right where it needs to be. So we look at those things. We don't get spun up over particular asset price changes, although we do monitor them, of course.
Nicole, for the last question. Hi, Nicole Goodkind, Barron's. Some
prominent critics have charged that the Fed's economic models are somewhat backward-looking, but should be more forward-looking, incorporating things like productivity increases from AI. How do you incorporate current and future developments into your analysis and decision-making, and do you have an answer to those critics?
Yeah, so by and large, those criticisms, as somebody on the inside, they just don't make sense, and I'll tell you why. Every FOMC participant writes down a forecast every quarter, right? The summary of economic projections, and that's the basis for how we think about the economy. So, and the other thing is, what an economic model can do is it can grind up all the data for the last number of years, 50 years, let's say, and it can identify what are the relationships between variables A, B, C, D, and all that kind of thing. And it can tell you if you change one of those variables, this is what should happen in the macroeconomy. That's just the way it works. However, the structure of the macroeconomy is constantly changing. For example, we hadn't had a pandemic in 100 years. It wasn't in the model, and we knew it from the very beginning. It was not in the model. A trade war of this scope, we'd never had that in 100 years. And so there's great uncertainty at different points. Another thing I'll say is, when it comes to, technological
So it looks like we can do one more leg higher here, guys.
raise potential output, some
But
kind of technological renovation,
tough
revolution.
little resistance spot for
like
SPY.
happened in the 90s here and like maybe happening now with AI. We're all over that. And, everyone studies those periods and, we're very clear-eyed about the possibility that this higher productivity may persist. And also that it may not. We're not, no one's sitting here unaware of the possibility of higher productivity. We've been talking about it for 3 years. It long predates the current situation. It's been going on for 5 or 6 years. We've had productivity higher. We've been talking about it that whole time. So it's very much on our minds, and we are well aware that higher productivity means higher potential output. And it changes the way you think about potentially inflation, growth, labor market, and all those things. That's all in our models.
Nasty little sell.
If it's just a question of using better models, bring them on. Where are they? We'll take them. But I think, we certainly are in contact with anybody who does economic modeling, and we're always looking to do better at that. But that's how I think about that.
And just a quick follow-up. We've been talking a lot about tariffs and passing through, and we've been talking a lot about them for the past few months. The trade landscape is still in a constant state of flux. Announcements, threats, negotiations, they're all frequently changing. So I'm wondering how you actually track these, what data or channels are most critical to follow this in real time.
Trade?
Yeah, the impact of tariffs and how they're changing.
Yeah, I think our staff has done a really nice job on that, and they've kind of put it together in real time. So as I mentioned, a tariff gets put in place. You can pretty much track its effects on pricing and on everything. And so you build a model up from all of the tariffs. At the beginning, it was very much of a forecast. Now it's every cycle that goes by, it becomes more informed by actual data. And our forecasts were not far off. What changed was, as I think I said earlier, what was implemented was smaller than what was announced. In addition, we didn't see retaliation internationally, and I think people did generally expect that because we saw that in the past, and that really mattered too. And then the other thing is that pass-through didn't know how fast that was going to be to consumers, didn't know how much exporters would take, how much companies in the middle would take, and how much the consumer would take. And it turns out it's a lot of companies in the middle who, by the way, are pretty strongly committed to passing the rest of it through, which is one of the reasons why we need to keep our eye on inflation and not declare victory prematurely.
Thank you.
We're done?
We're done.
Okay. Thank you very much.
Pretty much the meeting. That is the meeting. We'll see which way the market wants to go. Really, we haven't gone pretty much nowhere. I would say the bias is still leaning bullish here, since we're back inside of these previous upper boundary pivots. But realistically, it was a nothing burger event so far. There's 45 minutes. Let's see if they want to give it a quick pump into the end of the day. Metals pumped. I could see them pumping the indices now. But we've basically gone nowhere. Let's see if we get a squeeze. Let's see if they pin us here. That's probably going to burn a lot of people. We do have big earnings after hours, guys. Big earnings after hours. might just pin us here. It seems friggin' crazy. Sorry, guys, I missed a lot of the questions and statements in there. I've just been trying to scalp here quietly. Squeezy. NSD sell hitting the tape there, guys. Squeezing. Gold just ripping, guys. Absolutely soaring here. Crazy. Softening up. S&P looks somewhat bearish here into the close, struggling. Is going bye-bye. Gold is squeezing more than silver now. Guys, they did send out a new trade alert. It's pinned here, guys. Pinned as can be. Um, It's a freight train. It's a freight train. Silver squeezing as well. Bitcoin softening up. SPY coming in. Gold is a beast. Yeah, they pinned the market. That's nasty. They burned everyone. No big moves. I don't think we're gonna move down much. I think they're keeping us pinned here. Seems like Max Payne is going nowhere. Pretty shocking, honestly. I thought we were gonna get a big pump or a big flush, and it was fairly muted. The only thing that's ripped is metals, really. Gold is just running away. Look at that gold squeeze. Incredible. A little disappointed we didn't get a bigger range in the S&P 500. It's fairly muted here. Fairly muted. Big push in the market here. Gold coming in a touch, but what a move. Absolute clean move. Nuclear stocks, uranium still looking pretty good across the landscape. All right, guys, so we do have earnings after hours here. Again, Tesla, Meta, Microsoft, big boys. Big boys. Guys, if you look at IREN, that has had an insane move today. Look at that beautiful flag breakout. Looks like there's going to be a 3-bar surge, and this one could squeeze back to the highs pretty quickly. So I would look through some of your high-performance crypto computing stocks as potentially some catch-up trades. All right? Keep those on watch. All right, guys, I'm going to wrap it up here. I got some Champions League soccer to watch. A pretty lackluster FOMC day for the major indices. Really, the move happened early, and it was chop and went nowhere. That being said, no move for the structure of the market is generally positive, considering we haven't gone negative just yet. We've actually held positive gains while briefly dipping negative. So structurally, I guess the market is just going to climb the wall of worry and be happy with Powell's rhetoric and tone for the time being. Obviously, the week's not over, but so far looking pretty decent across the landscape. All right. You gotta take it easy, YS. All right, guys, final 15 seconds here. Again, we got Mr. Softy earnings. I gotta check to see what time is what here. I didn't even check that. Man, I was pretty disappointed with this Fed price action. No real trend to the upside or downside. Just one big frickin' chop fest. Man, I hate that. These days, you can literally make such a big amount, but it was a nothing burger. I didn't even take any S&P trades. That's crazy. I took nothing. All right, guys, that is the session. What am I doing here? I'm trying to get this earnings. IBM as well. Ooh. Microsoft down hard. Microsoft wicking around, guys. Ooh, Meta trying to pump. Microsoft trying to dump. Nastiness. Oh, have the earnings even come out already? Jeez. I'm still waiting on them. It's supposed to be only 405. Nastiness on both Meta and Microsoft right now. Wicking around all over the place. Jeez. Yeah, I guess Meta did come out. Fourth quarter net revenue 22.77 billion. I don't even know what its forecast was. Let me see here. Jeez, crazy movements. And we really haven't had it come out yet. 59.8 billion from Meta. Jeez. Crazy wicks. Crazy wicks. The earnings aren't even out yet, and I don't even know what the hell people are panicking and dumping here yet. They're supposed to only come out. Meta platform sees capex 115 billion to 135 billion. Huh. Expenses, yep. 59.89 billion for Meta. Yeah, it was a beat on the revenue, pretty big beat. But I think the capex is still pretty high. That's what people are really concerned about here for Meta. Still waiting on Tesla and Microsoft. Wow, look at them. Dumping Meta here, guys. On mute? No, I'm not on mute. I shouldn't be on mute. Meta's earnings are pretty good. Their next quarter guidance is really strong, actually. Yeah, it was a record revenue. Strong earnings from Meta. Strong. I think Meta gets bought up, guys. Yeah, so strong earnings from Meta. It's just their capex is fucking high. Over 100 billion in capex is crazy. Tesla is out, guys. Tesla is also out. Tesla fourth quarter EPS. Let me just see here. Tesla fourth quarter EPS is 50 cents, guys. It's a beat. Revenue 24.9 billion, coming in line with market consensus. Tesla is in line with market consensus. Okay, so Meta getting gobbled up here. Big bounce in Meta, big bounce in Tessie. What a rip. Look at that. What a rip. All right, guys, so they are saving the markets here so far. Tesla and Meta are ripping here. Dips were bought. Dips were bought. Record earnings for Microsoft as well. Let's see what Microsoft is doing. Still under some pressure. So basically one of three. One of the mags are down. Microsoft, Tesla, and Meta are holding steady for the time being. We'll see if that can last. Going into the report, Microsoft was already going through its troublesome price action, but pretty decent reports. All right, guys, we'll see you a little bit later. Cheers.